Smart Movers, I'm Siam Pasarly, and I want to show you this magazine. And this is Visionary Roundtable magazine, and on the second page, not second page, on the fourth and fifth page, here, I have this gentleman. His name is, yeah, you see this? He's a handsome guy. Jeffrey Getty. So, and he is the author of this book. You see the book? He's a bestseller, Amazon bestseller also. I'm lucky to have him. He has more than 20 years experience working with entrepreneurs, startups, business owners, give them advice. He's a public speaker, a coach. He is a tax attorney. Oh my God, you have got a lot of experience. Welcome, Jeff. How are you?
I'm doing great, thank you. How about yourself?
Thank you very much. It was such a nice meeting you at the Visionary Roundtable in Dallas.
Yeah, it was a pleasure meeting you as well. You've got quite the background and experience. I really enjoyed meeting you and talking to you.
Same here, same here. Thank you very much. It is important to say thank you to Deck Crew and Gen Crew that they conduct and host that great event. And I really enjoy your speech there. It was such a outstanding, and I love it. I love it when you were speaking. The information, everything was great. I thought I would invite you for my podcast.
Well, I'm glad you enjoyed it, and thanks for the invite. I love doing these things, and I always have a lot of fun, both speaking and being on podcasts. So it's a great fit.
Thank you very much. So usually I ask this question, if you don't mind, if you want to share your information. How old are you?
How old am I? I am 52. I turned 53 on July 6th, so
53.
almost 53.
Oh, my God, you look like 40 or 41 years old, very young.
I appreciate that. Not true, but I do appreciate it.
Yeah, and I like your energy. It's so high. It's great. So it is 53 or 54 years. Uh, how was this journey?
Journey's been a lot of fun. It's been interesting. I can't say this was the destination I had in mind any particular point in time, except maybe about 10 years ago. But it's been a fun journey. It's been interesting. Lots of interesting detours, left turns, right turns, but it's been a lot of fun.
Okay, I'm glad you enjoy your journey. You know, rarely it happen. People say that it is outstanding or it was great. People say, "Oh my God, I had lots of ups and downs. I had lots of problems." They just complain a lot.
You know what? I mean, certainly, I'm a big proponent of you can spend a lot of time talking about the negatives, and we've all had some dips and some drops in our lives. But I'd like to think I'm generally kind of a positive guy. I think if you keep a positive attitude and look for the good, you can find it almost anywhere for most folks. And I've certainly been blessed with a lot of really good, generally positive experiences. And I've certainly turned them into such. And life's been good and kind to me, and it's overall been very good.
So in this 53 years,
Yep.
yeah, what are the three lessons that you learned? Like if you give me an advice, or for other young generation that they watch us, what did you learn? What are those three lessons that you just say, okay, these are like very important lessons that I learned in my life, and I wish I knew this, or any advice?
Wow. Narrow it down to three, huh?
Yeah.
Okay. I guess first and foremost, I would say uh, don't take everything too seriously, right? At
Um,
the end of the day, life can be a lot of fun, and take it as such. So don't take it too seriously. I would also say don't try to plan too far ahead. Life has a way of throwing you some curveballs, and not don't plan at all. But life's going to take you down some interesting paths. And then I'd also probably say that make sure you surround yourself with good people. Be selective in who you're around. And I mean that from the friends you associate with to the professional people you associate yourself with, and perhaps most importantly, when you get to the point in your life when you're picking a partner, a life partner, a spouse, That's probably the most important choice you can make. And I've been super lucky in my life. I've been married to the same person for, close to 3 decades. And I really got lucky on that one. You pick the right spouse and everything else just goes super smooth. And that just makes everything so much better.
Oh, thank you very much. I think those were really important lessons that you share, especially surrounding yourself with good people. I always say that great people in your life, they are God gifted,
For sure.
and lucky people will have them. If you are very lucky, you will have those great people around you, and I mean that. So, what if I hear your name? What should come to my mind?
Hearing my name,
Yeah, what if I hear your name? What should come to my mind? If you
uh,
like two title or three title, you keep, or one title.
I'd say probably my name's most associated with me professionally, because if you Google me or something like that, most likely what's going to come up is my professional work. And most likely what's going to come up is probably in the tax, particularly the tax transactional space. And I'd like to think that what's going to most likely come up is helping clients or business owners come up with optimized outcomes as they transition their business. And what I mean by that in a less wordy way is minimizing the tax impact as they transition or transact their business. That's what I do.
Oh, I think I was reading exactly. I was reading your biography, and I searched your name on the internet. I found information that more with the you work with as a tax attorney. Am I right?
That's my professional background. I started my career as a tax attorney, and then eventually morphed into purely a transactional, or primarily a transactional tax attorney. That's correct. Yes.
And you studied law or political science.
So my undergraduate degree was in political science, a Bachelor of Arts in political science. I then went and received a Juris Doctorate, or a law degree. And then following that, I went to work as an attorney and went to night school and got a master's of science degree in taxation.
Wow.
So I have a bachelor's degree, a master's of science in taxation, and I have a Juris Doctorate, or a doctorate of law, a law degree. So all
Wow, that's great. Congratulations.
a lot of
It,
time hitting the books.
yeah, it is a lot of work.
It was, but worth every moment. At the time, I might not have thought the same way, but looking back, it went by in a blur, and it was worth every moment because it got me to the point of where I am today. And I was just telling someone this earlier. I've got the wonderful experience of genuinely enjoying what I do for a living. I really like it. And I'm very, believe it or not, passionate about what I do. And is one of those people in their career who just can't even imagine doing something different, because I really, really enjoy it.
What makes you very happy in your field?
So I give this a lot of thought, because I do talk to younger folks, my children included, who are at that cusp of beginning their professional careers. And I think what makes me most interested is maybe twofold. One, I am truly fascinated by understanding or learning from business owners what they do and how they make money, and how they started in their businesses, their stories, right? How they had an idea and turned it into something actionable, and made money. And then the other part of that, which makes it so interesting for me, is these same people who have had an idea and grew into something meaningful, they're entrusting me to help them transition or transact this thing they built, with the largest single financial experience they're going to have in their entire life. And they're entrusting me to do that with them, which is an enormous, I'll call it, honor. But it's just this enormous amount of opportunity, and they're entrusting me to do that. And it's something I take very seriously, and it's just such an awesome experience to help them do that. And so learning about them, learning about what makes them tick, their business tick, and then taking that and helping them tell their story to a buyer or a series of buyers, and then getting them the best outcome possible. It's just such a unique experience I get to do with so many different business owners over my career. It's just to me, it's kind of fun. It's enlightening, and it's a great experience. I get to know these people super well. Some of my clients I deal with for years as I take them through this process, and it's just great to get to know them. So I just really enjoy it.
That's so cool. I was reading about you that you are helping the entrepreneurs, business owners, and also families.
Yeah.
Yeah. So how do you support the families?
Well, so a lot of times with businesses, right, it's hard to extrapolate where the business stops and the family starts. Sometimes family members are in the business, but even if they're not, because the business typically represents such a large piece of the overall wealth inside the family or for the individuals in the family, it's hard to break that apart or separate it. So they become stakeholders in the business or in the family enterprise. So sometimes I have to help have the families self-aware, become self-aware that, hey, they really shouldn't want to keep the business, that the best option for them is to sell it and not continue on. Or in other cases, this is the flip side, that, hey, it's not in their best interest to sell it, it's in the best interest to keep it in the family because it's more meaningful to have the family continue to run it, or it's more meaningful for the community to have to continue to run it. So it's oftentimes they're the primary stakeholder along with the original founder. So yeah, oftentimes it's just as important to take the family as a whole as a part of that experience and talk to them and get to know them. So we're dealing with multi generations sometimes three, sometimes two, sometimes just one. So it's an interesting delve into the world of family psychology, or perhaps at times abnormal psychology. And so that makes it a whole interesting dynamic that, by the way, has nothing to do with taxes, has nothing to do with finance, and has everything to do with just interfamily relationships and interfamily working. So it's kind of an area that I never would have thought when I was a young lawyer that I would have been involved in, but that's the way these deals work out sometimes. And it's just something you grow into if you're getting any good at this stuff.
Yep. Well, this is interesting, amazing. And you talked about the transition and transaction.
Mhm.
Would love to, if you can explain and tell me the difference.
Sure, would love to. So, people tend to use those terms interchangeably, and I guess you could. I tend to view them very differently, so I like to think of them very differently. To me, a transition really speaks to an internal process. So a transition would be gifting or selling to kids, for example, or a transition would be an internal transfer to key employees or to management. So something like an ESOP or a management buyout. So the process is designed to move inside an existing group of existing stakeholders to the business, someone who's already attached to the business or attached to the family, as opposed to a transaction, which would typically be speaking about moving that business to a third party, selling it to a third party. So thinking about
Ah,
selling to a private equity group, selling to a strategic buyer, or doing an initial public offering or an IPO. Those would all be examples of transactions, right? So that's how I keep it straight in my mind.
that's cool. So the transaction means selling a business from one person to other person. Can you also tell me what type of businesses you have sold and what was the highest value of that business?
Yeah, so I've only ever worked in the closely held or privately held business space. I've never dealt with publicly traded companies. That's, when you start in this career field, you usually go down one path or another. Some people cross over, but I've never dealt with publicly traded companies. So I've only ever dealt with privately held. The largest deal I've ever worked on my career was just over $1 billion.
Over $1 billion.
Just over $1 billion, like a
Wow,
billion two. That's a little abnormal. I don't typically see deals quite that large. But that's the largest. You asked for that. Most of my deals tend to fall in the um, historically would have been down around the 20 to like 250 million. Today, the average tends to hover more around like 70 to about 350 million, with some that creep above that into the multiple hundreds of millions of dollars.
so how do you sell this over $1 billion business?
Very carefully. Yeah. So what the difference between selling a very large business like that and one that's substantially smaller, you'd be surprised, isn't all that different. The buyer pool's a little different, but the philosophy and how you go to market is not substantially different. The folks around the deal table, or the professionals around the deal table, aren't all that different. The seats to be filled are kind of similar. The buyer group, like I said, is perhaps a little bit different, but the strategy isn't materially different. The philosophy isn't materially different. The process isn't really materially different. Just the zeros. There's more zeros, and you just look at things a different way. But it's not that different. It's a little scary the first time you do a really big one, because you're like, oh my goodness, am I really qualified to do this? But if you've been doing the work long enough, you realize that, hey, I can handle this. I can do it. And you just take those years of experience and you surround yourself with other good professionals, and you can make those deals happen. So it can be done if you know what you're doing. It's just roll up your sleeves and make it work.
So how did you find the people that you sell this business on them? How do you find it? Through email, social media, you in person, networking? Like, how did you sell this business to other party?
Oh, how do I find the buyers, or how do I find the people
Yeah,
that are
yeah, yeah, yeah. So both of them, that if you are in a business, that you need to first find a business owner that
that
maybe,
want to sell?
yeah, they are ready or not, or maybe you
Yeah.
persuade them. And second, how do you find the buyers?
Yeah. So it's a variety for both. So let's talk about the sellers first. So with sellers, there's a couple different ways. One, through the firms I've worked at, right? There usually is a cadre of clients that are business owners that eventually will be looking to sell. So I've worked at, for example, banks that have commercial banking clients that eventually will want to go through a transition or a transaction. Sometimes those institutions have investment banking arms to them that'll have those clients that are going through that process. I've been in this business long enough that I know other professionals that'll have clients that are looking to sell. So lawyers, accountants, people like that. And then, quite frankly, in a lot of cases, I have clients that I've dealt with in the past that have referred me friends and family or other people inside their industry. I do a fair amount of public speaking. So I speak in industry conferences and trade groups, and I pick up clients that way because people hear me talk in these industry conferences, and I tend to tell a lot of stories so people can put themselves in the story and say, oh yeah, that sounds like me. This guy sounds like he knows what he's talking about. I should pick up the phone and call him. So I get work that way. I get introduced to clients that way. A little bit of social media, right? I do things like this. I typically might get a phone call or two out of this, or emails. So you'd be surprised if you do this long enough, people just kind of get your name, and you're just out there talking to people, and you get those phone calls. So from actual client acquisition or looking to do this, I get it from a variety of sources. And there's a lot of market demographics that are going on right now. So the baby boomer generation, there's a lot of businesses that need to do something, and those owners are actively seeking people who can help them. And one of the things I do that's a little bit different than some folks, not everybody, but some, is I'm what I call exit agnostic. I don't care what a client wants to do. If a client wants to talk about an IPO, a liquidation, an ESOP, a management buyout, or a third party sale, I'm happy to have any of those conversations, and I'm happy to help them with any of those strategies. I'm not a one trick pony, and that's somewhat unusual in this field. Usually people tend to only do one of those things or maybe two of those things. I'm agnostic. So because of that, I get probably a wider scope of conversations going with potential clients. How do we find on the sell side potential buyers? That's actually a little bit easier because of the growth of two things. One, private equity. When I first got started in this business, nobody even heard of what private equity was. I didn't know what private equity was. I'm not sure it technically existed in the 90s, the mid 90s, when I first got into this field. But with the growth of private equity, there's a lot of firms looking to deploy capital. So it's actually relatively speaking, easy to find buyers. The growth of strategic buyers, so people inside the industry who are looking to do a consolidation or to find options to help them grow their business, that's a pretty big growth factor. And all these things are driven off of technology. It used to be before the internet, so I'm old enough to remember the days before the internet was a big thing, you had to know people to find things. Now, today, there's all sorts of online auctions and information. People can use Google and other types of search engines to find businesses inside their industry that would be a good alignment to buy. So a lot of times clients will come to me with, hey, Jeff, I want to go to market, I want to sell. And here's 5, 10, 15 different firms that have been reaching out to me for the last 3 years that want to buy me. Can we start there? Sure. Let's start the conversation with those folks. Or they'll
I
say,
have,
I've been talking to
yeah,
this
I have,
iBank.
yeah,
Sorry,
I
go
have
ahead.
this question. Yeah, I have this question that why should people buy a business? Why they should not start a business from scratch? So is there any difference?
Well, it depends on the industry and depends what their philosophy is, depends what they're, what they're looking to do. But buying a business, there's already infrastructure in place. There's already, typically clients. There's, I don't usually do startup work, so I'm probably not the best guy to answer that question. I will say that some businesses are very hard to start up from ground zero, actually almost impossible. So there are barriers to entry in the field, right? It's hard to get one started. So if you can find one that's already in the industry, some of those barriers are already taken down. So buying one existing, you can already get in a lot faster or easier. Uh,
Oh,
so you kind of have a running start. Yeah, you have to pay for it, but you can get a running start. And you can typically, when you buy a business, you're also buying the owner for a period of time. So if I were to buy, I'll use an example, a widget manufacturer. What's a widget? Well, widget's something, this made up term. I don't have to know. I don't know have to know how to make widgets. I'm buying the technology. I'm buying the person who knows how to make widgets, and they're going to stay on for a period of time to teach me how to do all these things. And then as I buy the business and eventually I'm going to have them leave, I take over. So I don't have to teach everything to myself from ground zero. So there's some legitimate advantages to buying something existing as opposed to just starting.
I totally agree. I remember when Elon Musk bought Twitter. So when
Yeah.
he bought everything, like the user, the information, the platform. If if he started from ground zero, so it took like 1 year, 2 year, or more, maybe more than that. A lots of work, marketing, hiring people, and structure everything.
Yeah.
So yeah, I totally agree with you. So what are the big mistakes that the business owners make when they are selling their business or during the transaction?
Yeah, so there's a lot. I mean, I actually, usually when I give a speech once in a while, I haven't given it in a couple of years, the top 10 mistakes business owners make. It's a pretty popular one. So I won't go through the whole 10 because that's an hour-long presentation in of itself, but a couple ones to kind of glean off of. I'd say the first one I typically see owners making is not understanding first and foremost how a process works.
Mm.
So it's a pure education issue. They don't really understand how an M&A process works, how a sales process works. And I don't mean the very high level nuts and bolts. I mean not really understanding how buyers view their business and how valuations work, right? People tend to think it's a little simpler than it is, right? Like there's the multiples of EBITDA approach. That is a valuation methodology. It has merit to it, but it's really only one factor that buyers actually look at. In my opinion, probably the least important. Um, I think another major mistake people do is owners believe that they can just go to market whenever they feel like it. The best outcomes I see for owners typically do not start with someone waking up one day and saying, I'm done. I'm going to sell my business. And I pick up the phone and call an investment banker and list my business for sale that day and go to market. No, it's actually a longer process. They start today in anticipation. They're actually going to list, so to speak, and go to market 12, 14, 18 months from now. There's a big lead in time. So they actually understand that there's real work to do before they actually, quote unquote, go to market.
Yeah.
There's things to do to get ready, right? And not just, that's not even talking about the tax issues, right, to get prepared. It's actually getting the business prepared. Not preparing themselves is another big issue, right? So most business owners, I think, in my experience, believe that, hey, I'm going to sell my business and then I'm going to spend the rest of my life playing golf or sitting on a beach, drinking pina coladas somewhere. That's not the way most business owners, in my experience, spend the rest of their lives. They've spent so much time, hard charging, ready to take on the next deal or do the next thing. They'll get really bored really fast. So they don't have a vision as to what things look like after that. Now, some of them do want to relax, but they're not going to relax in the way they think they're going to relax. So they have to have a vision. They have to have a readiness assessment for themselves as the owner. So the business has to be ready. They have to be ready. They need to understand how the M&A process works. They need to understand how value and valuation works. They need to understand who they need to hire to have the best outcome. So in a larger deal, you're going to see an investment banker at the table. You're going to see somebody who actually is running the deal team, right? Somebody has to sit at the head of the table and make sure the iBanker is talking to the M&A lawyer, who's talking to the accountant, who's talking to the finance person, and who's running everything, right? There's a lot of different players around that table to have a successful outcome.
Mhm.
So there's a lot of things that have to occur for the best outcome. Now, having said all of that, people get lucky and you can go down a path and do things the 11th hour and still have a decent outcome, but it's rare. Usually people do this in a very methodical way who have the best possible outcome. So there's a lot of mistakes one can make. um, I would say about 40% of the deals I've worked on historically, I've gotten the call where a business owner has started on a path in a bad way, and at some point they realize they're in a little bit of trouble, and then they get referred to me, and then I have to do what I call a hard reset, where I have to reel it back in and then restart that process
Mhm.
because they started to make some of those mistakes. And then we have to stop everything and either completely restart or do kind of a restart in motion, right, where we kind of reset the table a little bit and keep that deal running. So that's kind of more than you asked, but that's kind of some of the mistakes I typically see.
Well, thank you very much. That was comprehensive. Uh, there's one question always pop up in my mind that how do you value a business? I mean, calculate the cost of a business.
Yeah. So I always tell people when they ask me how you value business, I say, well, valuation in its purest form, the answer is very simple. A business is worth what a buyer is willing to pay, which like a bad answer in some ways, but it really is. That's what it's worth. Having said that, there are a series of valuation methodologies, and to some extent, a business is worth based on the strategy to which it's being deployed. And let me give you a quick example. The value of a business is somewhat contingent upon the exit strategy which is being utilized. So if a business is worth, for example, $100 to a financial buyer, a PE group, technically it should be worth about $120 to a strategic buyer because there's things called synergies where a strategic buyer would pay more than a financial buyer. And if you went into the IPO or initial public offering market, it'd be worth even more than that. Versus if you went downstream, you did a liquidation, it'd be worth a lot less. So there's this sliding scale depending on what you're doing, there'd be a play on valuation. But the purest answer to the question you're asking me is, okay, how do you actually go in and say, well, that's kind of nice, Jeff, but how do you actually value a business? Well, there's a couple of different methodologies. And let me just hit a couple high points. I mentioned one already, multiples of EBITDA, where you do, that's actually a comparison where you look at other businesses inside your industry that have sold historically and what did they sell for. And the comparables you're using, you're looking at the EBITDA, which is really a measurement of profitability of the business. And you're looking at how many multiples of the profitability you get. So you literally take the profitability of the business and you put a multiplier on it. And the multiplier is technically the risk factor. So you say, okay, the multiple of EBITDA is because this is a super successful business and it's very low risk for the buyer. You get a 5 or 6 times your EBITDA, your profitability. So you take the profitability of that year and you multiply it by 6, and that's your price. That's a demarcation point, but there's a lot of problems with it in the sense of it only captures deals that actually happened, and it only captures deals that are actually reported. So there's some big gaps there, right? Um, there's another methodology called a discounted cash flow model, which is something that's taught to a lot of finance people in their textbooks. So that actually looks at the value of future earnings of the business,
Mhm.
and then discounted for present value. So there's these different financial modelings you can use. What typically happens is a buyer will use multiple different of these valuation tools, okay? And then they'll do some sort of average around these tools, and then they will come back to the seller and then give them an offer based on some sort of average or some sort of selection of those different tools they've utilized. So if you're a seller getting ready to go to market, the person doing your valuation to get you prepared as to what that business should sell for, they should be using a similar approach to a buyer. They should be using multiple tools, just like a buyer would, and coming back and saying, hey, I don't know exactly what a buyer is going to look at for you, but I use the same toolkit they would use. And I believe your business should sell based on my toolkit between X and Y. They shouldn't be pegging an exact number. They should say it should sell between this range and this range. And then if they did a good job, when the buyers come in and look at the business, start to give offers, those offers should come in that range. So you should have a pretty good idea before you go to market what the range of value should
Yeah.
come in at.
So if I ask you this question like this, suppose I'm selling my business,
Mm-hmm.
like 3 years old business. In this stage, you calculate the asset that I have, the human resource, the goodwill that I have, or what are those elements that you need to take care or just add it in your list that, okay, because of this, your business might have this much value in the market.
So all those factors have different answers depending on a couple of different things. So we're getting pretty far down the path of valuation. So there's different ways you approach that based on the type of business it is, the
Yeah.
measure of how long the business has been around, and how consistent the profitability is of the business. Is it a growing business? Is it a flat business? There's so many variables and factors, but those are all good questions. I kind of look at valuation is less of a science and more of an art form. And then the last piece I'd say along that, as far as the art form goes, is that just as important as any of the mathematics behind valuation, I always tell clients valuation is a lot like a story. Okay. And here's the story you want to tell to a potential buyer. So if you're trying to sell me your business, okay, and you're presenting your financials in the best light possible, you're trying to show your business with as much profitability as possible, that's great. But the other thing you need to show me, and this is the storytelling, the art version of that story, is that there's more opportunity to that business.
Mhm.
Okay. You want to show me there's more gas left in the tank, so to speak, because what the story is you need to tell me is that, hey, Jeff, I was able to pull out, I'll just pull out a number, $5 million a year in profitability. That's what I could do with the business. But Jeff, because you have more capital to put in, or because Jeff, you have a wider footprint or a bigger client base or more salespeople, whatever it is, there's some factor, some delta, Jeff, you have. You're younger, you're more aggressive, whatever it is, you're not going to get $5 million a year out of this business. You're going to get five times two or five times three. You're going to get more out of the business than I could. If you can articulate that story to me, I'm not going to pay you based on a $5 million profitable business. I'm going to pay you based on a higher number than that $5 million profitability. That's not a mathematical equation per se, because your math is only showing me 5 million of profitability. The story you're telling me is going to make me pay more than that. So I always tell people the real value and valuation has believe it or not, less to do, in my opinion, with the numbers and more to do with the story behind the numbers that shows an exponential growth factor beyond the numbers. So I tell people that's the real value of valuation. And that
Hey,
sounds really kind of crazy, but that's really where we see the big delta factor coming into play in valuation.
well, thank you very much for the information. Have you ever sold a flop business?
A flawed business?
Flop, fail.
Uh,
Like the
yeah,
business,
yeah, you can sell businesses that aren't doing well. Sure. Yeah, that happens.
it's easy to find a buyer for that.
Again, it's a little bit of a story, right? So the story I would tell to someone is here's what the owner did wrong, and here's how you could fix
Yes,
it.
I get it. Yeah.
Yeah. But it's a challenge because when you have, for example, declining revenues, right? Someone's going to take, no matter what story you tell as the seller, they're going to take that into account and use it against you. So it's an uphill battle. I have seen businesses that aren't doing well sell for a decent number, but you're not going to get some huge multiple off of it because it is a declining revenue business no matter what story you tell. It's very challenging, but they can sell. It's just like I analogize it sometimes to selling a house. And here's why this is super important. Like, I don't know if you ever sold a house before, but when you sell a house, what do you do? Right? You clean it up, you fix the things that are broken, you slap a coat of paint on, you look at best as possible. But there's only so much you can do. If your house is kind of junky and in a crappy neighborhood, there's only so much you can do. But houses always do typically sell no matter what, right? You just have to be realistic of the expectations of value and return. So it will sell typically. It's just a question of how much can you polish it up to make it look as good as possible. Businesses are no different than that. You can talk about the turnaround in the neighborhood. You can talk about the great new school that's being built in the district. You can talk about how whatever is going to make this worth more down the road. It's just a harder story to tell if you live in kind of a declining neighborhood. It's possible, but it's hard to do.
So how do you charge your consultation fee?
So it depends on the firm where I'm working at. So I've worked at a few different firms in my career, right? Some places I've worked, it's been an engagement per project. Some it's been based off a success fee. Some it's been based off of an hourly rate. Where I'm at right now, so you see the sign in the background, Callan Family Office. We do start off with a consulting fee. That's typically based off of a project or a monthly retainer, and that's up for discussion, right? I don't preconceive notion with anybody, so if you're wondering what that might be, I'd give you an hour of my time. We'd sit down, we'd talk about where you're at, and I'd come back with a proposal what that might look like. At the end of the day, if we can't reach a mutual accord or don't think I can add value, I'd shake your hand and say it was a pleasure meeting you. You got an hour of my time. And if circumstances change for either one of us, let's agree to meet again and see if we can work something out. If we can't, it was a pleasure meeting you. But that's how I typically work with clients, is to try to start small with a project. I don't typically jump in and try to do everything at once. I try to do something relatively small and start the process rolling so we get to know each other a little bit before we try to do everything. Once in a while, I do have clients who pick up the phone and say, "Hey, Jeff, I'm in the middle of a deal, and it's falling apart. I need to get this back on track." That's a little bit different scenario. We're probably going to jump in with both feet and do a much bigger engagement. So that would be priced differently.
I remember this. I remember the story you explained in your speech. I think that someone wanted to sell a business, and they just had like $500,000, something like that, and then they call you, and then you restart everything, and then you sell the business very expensive. Can you tell me that story quickly? I love it, but I don't have it completely in my mind.
So I told a couple different stories in the speech you were sitting in at. So I hope I get the right one. So if I remember correctly, that particular story was a gentleman who was, and I don't have enough time to give the whole fact pattern, but he was approached and asked what he wanted for his business. And off the top of his head, he said, I would need between 9 and $11 million for, is this the same story
Yeah,
between?
yeah, that is the same. Yeah, I think then it went to 19.
Yeah, he said he wanted between 9 and 11, and they said send over some financials, which he did, and they came back and said it's worth 9, and he smelled a rat. He said he didn't seem that think thought that was quite right, so he called me up. He was given my name by somebody, and I looked over the math and I said, well, you're right, that's not terrible numbers, but they're not exactly right. So I went back and to the buyers and I said, well, I looked this over and you missed this, this, and this. Why don't you guys try again? And they came back and they then said, well, you were right. We didn't know all that stuff. So they offered him 13. And I came back and I said, well, we're getting closer, but that's not exactly right. Here's some additional information I think you missed. And they came back and I think they came back at like 14.5. And then I said, well, I understand there was a PE group. And I came back and I dissected their PE strategy. And I said, we know up on the platform it's actually worth a lot more than that. We went back and forth over a period of a couple months. And at the end of the day, we ended up getting 16 million for that business. Yes, that's, believe
Yeah,
the story you were looking for. Yes, that
yeah,
was.
yeah, yeah. I just remember it was the same story that explained.
Yeah.
So this is why people should hire you.
Yeah, I mean, look, that's an extreme example, but at the end of the day, whether someone hires me or someone else that does the type of work that I do, the important part of this is twofold. One, by having someone in your corner, so to speak, at the negotiation level, which is the story you're talking about, you typically will get a better outcome on the purchase price. That's 100. My experience, been doing this for almost 3 decades. That's almost universally true. The second part of the equation is the tax issues, which is more the hat I wear than the negotiation issue, which is, the average tax rate for a deal in the United States is right around 30%. So
Yeah.
you think about all the years of work you put into building your business, the average you're going to pay in the United States is about 30%. That's state and federal and local. Now, somebody's going to sit there and say, well, I live in Texas and Texas doesn't have a state income tax. You're right. That's why I say the average, right? So if you live in Texas, it's less. If you live in New York City, it's more. That's why I say the average.
So
And
how do you reduce the taxes?
yeah, so how do you reduce the taxes? A great question, right? So what I tell people is that if I have enough time and enough patience from the client, so time and patience, those are two things. If you call me the day before the transaction closes, this number is not going to work. And if you call me 2 years before the transaction and you tell me I only have an hour worth, I'm only going to give you an hour's worth of my time, Jeff, I can't help you either, right? So, two big caveats, but time and patience, we can usually get that average 30% down to as low as 20, 15%. And if enough time and patience goes by, even lower than that, right? I can pretty quickly demonstrate to people we can get the tax rate down significantly by just some quick maneuverings, by re-racking things, whether it's, you know, rejiggering the ownership, doing spin-offs, reorgs, right? There's a whole bunch of different things inside the tax toolkit we can utilize to reduce tax liability. And I actually take great pride in spending time with clients to really figure out how to reduce the tax rate as significantly as possible. And it's 100% up to the clients how far they want to take things. I can promise you two things. One, there is absolutely nothing we're going to talk about ever in the tax realm that's going to get anybody thrown in jail, myself included. We push issues, we do not break issues. We do not break
Yes.
rules, we do not break the law.
Yeah.
Number one. Number two, we're not going to get anybody in serious trouble with the IRS. We don't push things so far, so nobody goes to jail and nobody gets in major audit problems with the service or the states. We take things as far as we can take them. And I tell clients, everything we talk about is risk reward. Hey, here's the risk of doing it. Here's the reward of doing it. Does this make sense to you? If it doesn't, fine, we throw it out and we go on to the next issue. So these tax issues are really where I spend most of my time. The negotiations are important, but usually there's other people at the negotiation table with me. They're called investment bankers. When the tax stuff comes in place, there are other people at the tax table too, your tax attorney, people like that. This is where we add value. So going full circle back to how we get paid consulting fees. Also, Callan Family Office is a RA firm. We also offset those fees with investment management. So if a client ends up becoming an investment management client of the firm, we're happy to do and an offset for some or all those consulting fees with investment management fees. So we try to be very flexible in the fee arrangement. So if a client picks up the phone and calls me, like I said, I sit down with them, find out where they're at, and see if we can find a way to work together. Typically we can, but in some cases we can't. Like I said, hey, no harm, no foul. Happy to talk to people. I tell everybody you can have an hour's worth of my time, at least over a phone call or a Zoom, and see where things are. If we can't figure something out, we both lost an hour. Not a big deal.
Well, thank you very much. It was such a informative session with you, Jeff. I have two final last questions.
Sure.
One, I need a little bit information about your book
Yeah,
published, and the last question, how can people find you?
sure. Which do you want to start with?
Book would be good.
Okay, my book. So what do you want to know specifically about the book?
Tell me about the title. When did you publish? Why you published? And how can people find it?
So the book is called "The Descent is the Real Climb," and the title was based on the concept of business owners are really good at climbing the mountain, right? Getting if you're a successful business owner, you got to the top of the mountain, and that's hard in and of itself, and I give you a lot of credit for that. But that's only half the journey. The other half is successfully descending. And I can't help you get to the top. I don't know how to do that stuff. That's not my background. It's not my experience. I can help you descend properly. I can help you get to the bottom successfully, whatever that is. Like I said, I don't care if you're going to give it to your kids, sell it to your kids, liquidate, IPO, sell it to a third party. That's what I do. I don't help you climb up. I help you get down successfully. I wrote it during COVID. And how that happened is when I meet with clients, I usually tell them stories. I try to relate because I find it easier than just talking a bunch of technical mumbo jumbo. I try to tell people, listen to what they have to say. And then I tell them stories of clients I've worked on in the past so they can see themselves in the stories. They can understand what I'm talking about to give them examples. And all my clients always said, you have such great stories. Why don't you write these down? And I always say, yes, of course I'll write them down. I never had time. COVID hit. I had to go off the road for like 12 months. And I sat down and wrote. So that's how it came about. Doug and Jen Crow were my publishers and editors, and they were fantastic. And if you want more information about them, reach out to me or reach out to you. I'm sure you'd be happy to.
Yeah, I think one of my book also published by them.
Yeah, they're great people, and they really took a lot of stuff out of my head and helped me get it down on paper, which was awesome.
Very great.
Amazon is where it's most easily gotten. Just look at the title, "The Descent is the Real Climb," or put my name in. You'll find it that way too. I think it sells for about $20. The other question, how do you get a hold of me? So easiest way to get a hold of me probably is I work for Callan Family Office. CALLAN Family Office. If you Google that, you will see me on the website, and you click on my name, or you scroll down. My picture shows up, and you can click on my name, and you'll see my email. Or you can go on LinkedIn. I'm at Jeffrey Getty on LinkedIn. You can reach out to me through there, or you are free to reach out to me on my email, which is jgetty GETTY at callanfo.com, or I'm happy to share my cell phone, which is readily available. It's 412-303-4521. Again, 412-303-4521. Drop me a text, call me. Happy to chat with you. You can download my head for, like I said, I'll give anybody a half hour to an hour to chat. See if we can get something going. If we can't, more than happy to talk to you anyway. So
thank you very much for the information. Honestly, it was such a useful podcast for me. I learned a lot, and I'm sure lots of people, lots of refugees, newcomers, they follow my YouTube channel and social media, and all the tips that you mentioned are like golden tips. They will learn a lot. Thank you very much for your time, and I hope to see you again soon.
I hope so as well. Thank you so much for having me on. I really enjoyed it. I look forward to catching up with you again in person. Always a pleasure.
Thank you very much. Have a good day.
You too. Be well.
Thank you.